See if we are live. All right, yeah, we are live. Well, what's going on, everybody? My name is Amal. I have Faisal on the call as well. Today, we are going to go through crypto and Bitcoin analysis. Lots of big moves that happen, especially even in the crypto market. And then Faisal and I are going to discuss things regarding the stock market, things regarding maybe the broader economy, how things are either going through the whole second wave, or if you want to call it the first wave of the coronavirus, how we're being impacted, etc. Okay, so if you guys are joining, make sure you hit the thumbs up. Make sure you say hi in the chat so I can know who you are. And we'll get started in about 30 seconds here as I let people know we are going live. Let's see here. All right. Cool. All right. So let's get started. I'm going to go through the Bitcoin analysis first. All right. So a couple simple ways that I was kind of looking at the market was, let me pull up this chart here. So I got too many charts that I'm working with, but let's see here. Stocks and futures. Where's my chart? I think my chart is over here. Let's check that out. XBT. All right, so you guys know I utilize BitMEX as one of the larger exchanges for how I like to view price action, and then Coinbase, of course. And the reason why looking at different exchanges is important is because we have so many different derivative exchanges in the crypto space. We have spot exchanges in the crypto space, and then we have some larger exchanges in the Asian markets, such as OKX and Huobi, right? So I try to make sure I do a good job at sort of diversifying how I look at the market based on the perspective of all these different exchanges. So the one exchange that I typically focus on is BitMEX, one, because it has the largest volume transacted and typically the largest notional value in terms of futures perpetual contracts. So BitMEX it is. All right, so here we go. All right, on the 1 hour time frame, the one way I'm looking at the market in a very simplistic manner is this larger range this range right here that I've defined. Okay, so it goes from this key low right here and this key high, right? So typically, whenever you start poking above these lows, kind of above lows and highs like that, we just kind of write it off as a deviation, because price typically spends most of the time, if you draw your ranges properly, it spends most of the time inside the range, right? So we've kind of done a good job at defining this range. And if you see the outliers, the deviations to the downside or the upside are pretty much outliers in terms of this larger range. And so the one thing that I've kind of understood and come to grips with is we've effectively put in this deviation around $9,600, $9,700, come back inside the range and hit the bottom of the range low, which is right around 9,000 flat, okay? And then just today, right, we had some heavy selling, not only in the equity markets, but even in crypto, right? This was yesterday, and this was today, okay? Heavy selling went into the crypto market. However, we still put in a low and then a higher low today. And so these higher lows are typically important because it helps you understand the strength and structure of how the bulls are reacting to what's happening in terms of the selling in the market. Now, if there was aggressive selling in the market, we would have possibly pierced this low and headed down a lot further. However, that didn't really happen, right? You could see we put in a low yesterday and now a higher low. Now, the immediate resistance that we have right above us is this 91.95. And the way I come to that is, you can see this was kind of the base that was formed right here with this wick, okay? And then we broke that with this candle, but then again, pierced above that, reclaiming the bottom of this key support resistance level area. As support pushed up higher, got rejected by the weekly open, and then again, sent down below and rejected by this key level again. So I know for sure that this is the proper defined level that we want to be paying attention to. Now, as we get into the weekend, I've told you guys Saturday volume is bullshit. Okay, don't ever take trades on Saturdays unless you want to lose money. It's bullshit because typically the professional traders and especially the CME futures traders do not come back until Sunday evening, right? So what you typically see in the market is scam wicks up and down in the market. So easy for you to get torched on either side. All right. So it's best that if you are, beginner trader, or if you are trying to figure out how to position yourself in the market properly, don't take Saturday trades. But as we go into this weekend, okay, something interesting that's happened right now is just right around market close today. If you look at this descending trend line, again, these are kind of lows that were put in pretty much all throughout today, right? We pierced outside of this trend line. So the way I'm looking at this is, okay, well, this is a positive sign. And it's possible that from here, we push up back maybe again towards this weekly open around 92.99 or possibly higher around 94, $9,500. And the way I get that is, let's see over here, where'd my chart go? Yeah, right over here, right? So you can see 91.95, that same level we're kind of getting rejected at. But if we get above this level and say we hold, this could be your potential long position from here, stop below this wick, and then target 92.99 on BitMEX, or $9,400 right here, which is the high of this key wick right here. Alternatively, you could also aim for this range high, which is this larger trading range, which is around 95.50 or so. All right. So different ways to look at the market in terms of support and resistance levels, but also different ways to see if there are quick scalps in and out. All right. But in large part, the one thing that I've kind of stayed true to is my swing short position, which I've been, just hanging out in for quite a while. And it's been kind of nice because the funding has been pretty good or benevolent towards shorts. So all I do is kind of hold on to my short position and pretty much get paid. Whenever the funding is benefiting shorts, you're effectively getting paid to hold on to your short position. And it's been kind of nice because as the market has kind of, by the way, I started opening my shorts way the heck back here. So I've been sitting in a short for like almost 20 plus days now. Additionally, I also had a short way the heck back here. So I've been getting paid in funding because the market has slowly been bleeding and bleeding, kind of like this. Yet the longs have been overwhelmingly have had to pay through this entire structure. So the shorts get paid while the longs are paying. And it's just nice for you to hold on to your short position. So if you look at this larger structure, right, there's nothing that has changed in the market that scares us away from our position. In fact, I feel even more comfortable staying in my short over the weekend because I'm thinking that, all right, maybe from here I get a move back up towards 95.50 or so, and that might be another reload for us to add on to more shorts. And again, that's if you believe that maybe the market is going to go down. I am of the opinion that I still think the market is going to break down. But if you don't think so, then this is your perfect longing opportunity, in my opinion. All right. Let me see here. Let's check out the daily. So I want to show you guys a couple things on the daily. Okay. GBTC, the one asset that we've been paying attention to, pretty much shat the bed today. All right. You can see the Bollinger Bands right there and the 34 EMA. The two areas that I've been watching, both of them have been broken over the last several days. And I've told you guys historically, if you look at either once price breaks below the Bollinger Band or below the 34 EMA on consecutive days, and this is again only in GBTC, once that price does that, it's a pretty swift movement down. You might have maybe a couple days chopping back up, but usually we're going to start our descent down. Alternatively, even if you don't want to look at these overlays, right, you simply want to look at horizontal levels. Well, this was the key low that you can see that we held up between this first top and then the second double top. And now we're sort of breaking below that. As a key marker in Bitcoin, which was 9.98. So we broke below that. Not only did we break below that, we closed pretty deep inside the body of the candle right there. So I'm still thinking that overwhelmingly, I still think GBTC is weak. Now, we don't know exactly how the stock market is going to start holding up next week or the week after that. But as of right now, Bitcoin definitely looks weak in the larger, daily time frame perspective. In the local time frame, like I just said, you have opportunities that are available to you in terms of potential scalps. Maybe you get a scalp once you start seeing a close above this 91.95 area. You take a scalp from here to 92.88 or $9,400, or you could wait up here or up here to add or open a short position. Let me see here if there's anything on the oscillators that I'm noticing. Another thing that I've been harping on over and over again is the OBV indicator, the unbalanced volume. Again, inflows are not being seen in XBT, at least this particular asset. I don't think they're being seen in Coinbase either. So this is one of those clear indications that money is actually not flowing into this asset for the potential long side. Okay, in fact, it's either very dismally in terms of demand, very dismal, or potentially more people are selling. I also put out an article about this whole GBTC thing that people are talking about, where Bitcoin is being bought up by GBTC all the time, and that doesn't seem to be the case. It's on my Twitter feed, so go check it out and read it for yourself. I don't want to inject my own bias into it, but people think that that is the most bullish thing that's happening right now, and GBTC is buying up all this Bitcoin, and we're going to be in a bull market. I don't think that's the case. I think that there's a lot more going on than meets the eye. So be careful in thinking that you just need to be blindly bullish because GBTC is buying. Okay. Last but not least, the blue line, the infamous blue line that I've been talking about. It goes back all the way to June 2019, where it stretches across, and you can see all across, it's been a key support and resistance level on the way, down right there, support all the way across, resistance right there before it sells off, resistance right there, support right there, resistance right there. So anyway, across the board, it's been a key SR level. And you can see again, we're sort of attacking that same marker multiple times, right? We've done it for the last 2 weeks right here. We've pretty much sat on it. And so the way I'm thinking of it is, once you break this blue line, we've seen double-digit percentage movements away from this blue line to the downside once you break it, or to the upside once you break it, above. So I'm thinking that either this weekend or next week, if we break this, we might see a pretty swift move down, at least towards $8,500, $8,600, or way the heck down here around 7,500, 7,600. Okay, and I know I've been saying that for a while, but sometimes it takes markets a longer time frame to actually start breaking particular levels. Either the market is uncertain about what's happening, either the market is trying to weed out participants, especially in the option space, because the options open interest was so clogged with calls and puts. We had about $1.2 billion in expiry. I think a lot of them pretty much went worthless, especially the call side. So there's a lot of reasons why markets do what they do. And it's pretty much impossible for the average person like myself or you to understand why the market is not breaking particular levels or holding particular levels. We can only look at the clues that are in front of us, like volume, like price action, like the indicators, or like, especially in Bitcoin, we get to see the movements of Bitcoin in and out of particular wallets, in and out of the inflows of exchanges, or inflows or outflows from miners. So these are the clues that you want to pay attention to see what's going on. And as I've stated before, I believe overwhelmingly that this is a larger form of distribution that's happening way the heck up here. Unless Bitcoin gets above this 10.6 marker, I have no reason to be bullish. Until then, I'm going to keep my swing short open, and I'm going to scalp long, from level to level. All right. Is there any questions so far? Do y'all have anything you want to ask? Let me see here. Let me see who all's in the chat. See what's going on. We got a couple people on Facebook and Twitter. A couple people joining us. All right, all right. Let's see here. Okay, so no questions so far. Okay, that's good. All right, well, Faisal and I are going to move on to the equities analysis. So um, let's get to it. Faisal, what's going on, man?
What's up, man? How you doing?
Fantastic, fantastic. Heck of a day in the markets. Well, what do you have for us? And what did you think about the closing of today as Friday, and also pretty much this entire week?
I don't really know if it's possible to feel more positive about the market on a down day than an up day, but that's kind of like how I felt at the close today. If y'all are following me on the Discord yesterday, I really did not like the rally that we saw, this 300-point rally at the close that we saw that really took assets up to very particular resistance levels to where I said literally in the last 10 minutes, I shorted the IWM. I said I don't like this rally, and then I said in my note that basically wherever they pushed everything up towards, it kind of left a lot of downside volatility for the next day. So I was really expecting, this day to be kind of ugly, but to be honest, it really did not meet my expectations to the downside. And that remains to be seen. They could still push this market down, but I think pushing it down to this S&P level. What was the S&P level low we got today? Let me see real quick. They pushed it down to a good enough level. It wasn't my exact target, but they pushed it down to where I could definitely see this market rallying from here. Now, usually on 4-day weeks, where next week we're going to have a 4-day week. In the past, I've noticed that it usually is a down week, and then for some reason the following week that's when we start to rally. I don't know if that has any real value, but that's just something that I've noticed, and I'm not really taking action on it, but I don't know if anyone else has noticed that. But for the most part, a lot of my key leaders held up very well, despite this constant cycle of the market moving up a little bit and then selling down very fast, moving up a little bit, selling down. I really saw a lot of encouraging signs. And then also in the high growth sector, these stocks that are still trading at extremely high premiums, they're continuing to get bought up, like DocuSign up another $9, I think.
Oh,
Um,
Docu was killing it today, man. That was
yeah,
like my favorite stock of the day.
yeah, exactly. But that's not even the only stock. We're talking. I was in the stock today, Mercury. I had to get out of it because I took a position in Facebook and just wanted to cut my overall long exposure or keep it the same. So I cut Mercury, but that was up 6%, and they do a lot of AI and stuff with drones, and they do a lot of make a lot of technology for the military. So they're a fantastic company. They're a high growth company. Also, Match.com up 2%, Proofpoint up 2%, Twilio up 2%, Cadence up 1%. So even on a day where you have the market seemingly just looking so negative and red, there are trends that are building in the market that have been positive for the market before. And it's not like it's just individual stocks going up. No, they're moving up kind of towards the same price. Like even a stock this morning, I really felt negative. I was like, okay, good thing I got in my short. I'm feeling good right now. And then around 9:20 Central Time, I really started to see them buy up stocks like Avalara, Coop. They really started to hold up the high growth leaders, which, in my opinion, will be the first stocks that will end up leading this market to the downside when it's ready to go down. So I'm always paying attention to these guys, but they really came in and started to buy them. And that was the first time to tell me, okay, there could be some buyers waiting at this level, even though it's not at the perfect support level. But overall, that continued throughout the day, and then towards the close, even a leader like Coop, uh, damn, it made a new all-time high today, and the market was down 700 points. Keep in mind, this is a stock trading at 300, 400 PE ratio. And that's not to say that at one point it won't meet that valuation, because obviously that's what analysts are expecting, but that's crazy. That says a lot about the risk appetite for the market. And as long as it remains that high to the point where people are taking, still buying these stocks at a high premium, I think that's very positive for the market overall.
It's interesting you say the market having sort of a risk on environment right now, because what I was seeing, some of the stocks that I was watching, like AMD, Beyond, Facebook, Apple, these stocks, for the most part, they held up pretty well too. Can you give us actually a couple of one-liners on your, first of all, what exactly is Coupa software as well as Avalara, so people can understand, why you're specifically talking about these stocks, as if the market is ready to break down, why is it that these stocks will start breaking down?
Yeah, sure. So for the most part, how I tend to view the market is I don't really, I mean, obviously I look at the indexes, but the indexes are comprised of multiple stocks. And within those stocks, they are all segmented into different groups. Sometimes it's relating to the industry that they're a part of. Other times it's relating to just the themes that are going on in the market, like the bailout stocks or the Corona Advantage stocks, for instance. So I look at all these different groups to kind of give me a very good sense as to what the risk appetite is like in the market, whether or not things are still healthy. And I really like to value the high growth sector, one, because they've continued to defy odds of every single person as far as just how expensive stocks can trade at a normal level and continue to expand their multiple, because obviously we get that this work from home thing is really promoting a lot of these cloud-based companies like Coop. They make a lot of cloud products, collaborative products, and I think they even help with cloud infrastructure. I'm not sure about that. Don't quote me on that. But Avalara also does automated workflows for accounting processes. So all of these types of technologies are really in demand right now, not only because of this whole work from home thing, but big corporations, if y'all were keeping up for the past 2 years, they've had a lot of money saved up. They have a ton of cash and we're ready to use that cash, in terms of CapEx to spend and grow and do whatever. But then the trade war hit. They couldn't really expand in the ways they wanted to. You saw CapEx levels really start to recede, and companies said, look, we're uncertain about the environment, so we're not going to spend. But the only clear way that I guess these companies said we are going to improve on is by integrating software at multiple levels, whether it's cybersecurity, collaborative software, infrastructure software. So that's why these stocks continue to be so popular. And I think because they're trading at such a high valuation, these growth stocks, I really just think they're going to be the first ones to topple. When they really start to break down, that's when I'm going to get afraid of the market. I think once we lose that type of risk appetite, it says a lot about this market, because this type of growth that they're projecting for the software space is supposed to be historical. I mean, hell, I don't even think majority of businesses. I think the data came out like there's still 85% of businesses that need this type of technological penetration on multiple levels. I think a Jeffries report came out a couple of weeks ago that said that. So there's still a lot of runway to grow for these stocks, even if they're trading at current PE levels that are wild in a market environment
Yeah,
that's so uncertain.
I was gonna. Yeah, I just wanted to comment on that. Yeah, I wanted to get your thoughts. It seems like some of the perennial players in the market, they're trading at 30, 35, PE levels, and they're trading like their stocks, looking into the 2022, potential productions and projections and guidance. Do you think that we might be sort of overshooting maybe the stock prices and valuations, thinking that everything is just going to be hunky dory, given the fact that we're still kind of struggling to get the economy back on track, struggling to get the coronavirus under control?
Uh, Well, I think for those reasons, maybe, but I definitely agree with you that I think we're overshooting it, because I think, as we've seen, people are just buying the whole sector in general. And as I said before, at some point, you're going to have these companies kind of intersect each other in terms of targetable audience or whatever. And just as you said, as these bankruptcies increase and your target customer total pretty much shrinks in theory, you will have competition. They're going to be at each other's necks because there's less audience to target. So I totally agree with you. I think it's totally plausible that these companies are pricing in almost near perfect scenario. But at this point in time, because of how uncertain other asset classes are, whether you're talking about the retail sector or you're talking about the industrial sector or any other sector, because of how uncertain those earnings are, I think that's also pushing people to buy these stocks as a sort of safety trade. And I said that I want to say a couple weeks ago when Stanley Druckenmiller went on CNBC and said the risk asset price, the high growth stocks are just insanely overpriced. There's no way I could ever touch them or something like that. And I said, look, I totally don't agree with that because they're going to be considered as the safe assets in this type of corona environment. There are too many companies that are putting out too many uncertain numbers, and it's these software companies that are putting out, hey, we're going to keep growing, we're going to keep meeting our targets. They're the ones that are actually saying we're going to exceed. So when you have that type of disparity, I think it adds a level of value that goes beyond traditional valuation metrics like PE ratios.
Yeah, that's I think that's a fair point. Um, Let me take some questions from some of our members real quick. First of all, have you taken a look at, I don't know how to pronounce his name, Xiaomi, this company, the Chinese phone company?
I've heard of them, but I've never looked at their stock.
Okay, I actually haven't either, Chaos, so I don't quite know much about them. I do know that when I went to Australia, when I went to India, a lot of people actually have these Xiaomi phones. So they are definitely penetrating, the smartphone market. Maybe not as well as Apple, but it seems like they're there. They're there fighting, fighting for their share.
I will
Uh,
ask, like, make sure that they are coming out with a 5G phone. Like, I'm pretty sure they are because they're a pretty reputable smartphone company. But make sure they're coming out probably in this cycle because, as we've seen this year, investors are just whether or not you believe in the value in 5G, investors are just piling into these 5G names because they think the growth is going to be um, just of a huge magnitude. So if Xiaomi is developing a 5G phone, I think it'll continue to see. I mean, actually, I don't even know how this stock trades. That's probably not a right thing to say, but I would think in theory that it would see more momentum because of how valued 5G is in this environment. And maybe it's already seen that momentum kick in if they have a phone. I don't know. But I would just make sure that I would want to invest in a smartphone company that is developing 5G phones for this year.
Right, definitely. I was gonna say, if you guys are looking at this chart, for me, this kind of looks like a pretty clear, inverse head and shoulders pattern. If you guys are, technical traders, on the breakout of, let's just say, if you want to look at the neckline kind of, holy shit, that's a terrible drawing. Let's see. How the heck do you spell this thing? Let me see. So if you guys are looking to trade this thing, okay, if you want to see like a clear breakout above this trend line, all right, and you see it hold, that could be your entry point. Again, not financial advice, but if you really like Xiaomi and you've done your fundamentals research, this would be technically the breakout point that you want to enter anyway. Okay, let me see here. Let's see some other questions. All right, so this is an interesting question by Ezekiel, one of our members, Faisal. Do we think that there's going to be, or rather, is this the start of the meltdown? Or do we think that this is just a temporary breather more before all-time highs?
I'm assuming this is in response to what's going on with all the COVID surges we're seeing in America.
So yeah, so I think it's obvious that most of the world is starting to look at the news and looking at America as kind of like a dumpster fire. Like, we're not able to contain its fires. EU is potentially banning passengers and flights from America. I think South America is actually on its way to do that as well. States are actually starting to roll back their was it phase 3 or phase 4 reopening that they were going to go through.
Mhm.
So I think, aside from the news itself, maybe Ezekiel is also looking at the last several days of just some downside that we've seen.
So yeah, I mean, just if you're basing it off the last couple of days, especially when we had that huge jump, at the beginning of May when we hit that high, yeah, you could say we may see a little bit of shakiness, but I really, just based on the action that I saw today and all the headlines that came out today, as far as the amount of COVID surges happening in not only here in Texas, but across the country, and the fact that Texas also walked back on their reopenings, I think that's a trend that probably got priced into the market now, because I don't know why it would take a couple days to price out. I would have not seen the amount of stability in not only stocks like Apple, but also the bailout stocks. I saw stability in them, and y'all know I've been hating on them for a long time. Like even casinos, like if you're still in the casino short, I'd probably get out. Okay, like I think they're about to have a nice run, and even though it doesn't make sense because it feels like in reality things are picking up in terms of COVID stuff, what the prices are telling me is completely different. And in my opinion, I think we already took a breather. I think if you look at what the main stocks that are going to be affected by the second wave, let's take a look at Las Vegas Sands, for instance, LVS. Okay, that stock has come down from 55 and a half since the market peaked to now it's at 43. How much percentage is that down? That's a 23% drop. If I'm telling, like, basically in my theory, I think that was the drop that was already pricing in the second wave. And so, for instance, I think if we start to see stability come Monday in not only these stocks, but in the leadership stocks as well, I think I'm safely going to say the market may have already priced in the second wave based on how much these stocks have already dropped from their peaks that we saw just a couple weeks ago. So,
What are some leadership stocks that our viewers should be looking at, Faisal?
um, so I think in the software space, Avalara has taken the place of Okta. Um, that stock, as long as you continue to see this stock get bought, I mean, like hell, it should pull back at some point. Okta has been a great cybersecurity leader in this space. Coop has been a great cloud software leader. What else is a good leader? Obviously, the Apples, the Amazons. Um, Another underrated leader, I like to watch UNH, Johnson and Johnson, um, and Abbott Labs in the healthcare space. There are just multiple leaders from multiple sectors. In the bailout stocks, I think I like to watch United Airlines, Southwest Airlines, Royal Caribbean, and Boeing, definitely, because I think those are the four best in that group. And then also Las Vegas Sands as well. There are just multiple leadership stocks for every single stock group or industry. That's just how I look at it. Maybe one day I'll come out with a whole list, but that's all I'll give you guys for now. I don't want to go too much in depth.
Right, right. Yeah, no, I think a lot of people are wondering that. Wait a second, it seems like the first of all, I wouldn't even really want to call it a second wave, because to define it as a second wave, you would have had to see the not only the flattening of the curve, but a deep, downwarding slope of the curve, and then you see a resurgence of the virus. But in fact, what really happened was we kind of just walked into the first phase with an even more aggressive infection rate, right? So, question is, as we see this first wave now extending, what you're thinking is overall, it seems like, okay, well, it's not impacting the market a whole lot. And if it is, there seems to be a lot more clues in the market to show us that there's buying happening. Is that effectively where you are right now?
Yeah, definitely. I think you're seeing the pricing in of the virus take place in the main stocks that are affected by the virus, like the casinos, which were down 15% this week, the airlines, which were down like 20% this week. You're seeing them take place just because the headlines say Apple made a new high, and obviously Apple stores are completely contingent on being open and they're being shut down because of the virus. Just because you're seeing that stock make a new high doesn't mean there's active discounting taking place, especially for the stocks that are the most near-term affected by the virus. So yeah, once again, I'm not saying that the market can't pull back, but like at this point in time, it just seems like things happen in once again a very secular way, in a very disguised way. that you'll get days like this where the market will be down 700 to 800 points, and you'll still see signs of stability, even in the stocks that are directly affected by the news that's seemingly causing this 700 800 point drop.
Yeah, I'm kind of in agreement with Faisal here. Like, I told the Advantage members today, I picked up some additional positions in the stocks that I bought earlier on in the week, and I wasn't seeing the kind of weakness that I would have. It would have pushed me to actually go out or close out my position, or at least reduce. In fact, I actually added more to my position, which I let Advantage members know. So make sure y'all go check that out, by the way. It's in the US stock market discussion channel. But I'm kind of with Faisal here. Like, it just doesn't seem like for now, you can't really say that we're definitely going to break down. Even if you're just, simple moving average trader, this is the 200 moving average on the daily time frame. You can see right there, we pretty much are hitting that today. So if we're bouncing off this, say, come Monday, Tuesday, it's possible that we maybe head back towards these highs right here that we put in June 8th or June 9th,
Yeah. Go ahead.
Yeah. So another way I'm looking at this is there's this, big gap that I'm looking at that I personally think that we could easily fill, and that's right around 33.25 or so. So with that, if you're just looking at this market as, okay, the technical play of the gap is still right there. No, this gap has not been filled. And if you're thinking that, okay, I'm gonna just play this solely on a gap, if you're just a technicals trader, well, shit, you got a pretty good opportunity. Your risk to reward is pretty good because you could buy some calls or buy some SPY ETFs with a stop just below this area right here, low of this wick, and then start aiming for the closing of this gap. Again, if you're just simply looking at this from a technical standpoint, not worrying about the economy and the coronavirus and everything. I heard this podcast the other day, and people were kind of perplexed and puzzled about what's happening in the stock market, not matching the reality of, what's happening to the real economy and what's happening to the workers and the wealth inequality that's being separated and stretched out further and further. And the one thing I took away from that is, unfortunately, when you're trading markets like this, you kind of have to put your morals and your bias aside. And if you're seeing the right signs in the market, don't get scared emotionally to pull the trigger on your trade. Don't worry about what's happening in the news events. Don't worry about what people are talking about, the coronavirus, and this and that. Of course, if it starts reflecting in the market, then react appropriately. But till then, the quote was, when the music's on, you got to dance. Right? And unfortunately, the Fed is making us all fucking dance. And, for now, it just seems like one of these markets where if you're a bull, you're going to get paid handsomely to take the risk of knowing that the Fed has your back. And if you're a bear, you of course have your moral justification of the market going down. You also have the data to support it, in my opinion. But what you don't have is an unlimited, printer, which the Fed has. Their bazooka is always loaded and they're ready to pull the trigger. Jay Powell, I'm pretty sure, is just sitting there, buying stocks up and down. But anyway, so that's what I wanted to say and get that out. Sorry. So I'll let you go, Faisal.
No, I just wanted to touch on the technical aspect. Yeah, I've been reading a lot of stuff from a lot of smart people saying that we're going to hit all-time highs this year in the S&P. I really don't think that's the case, and I think you laid it out perfectly. That gap, I think, will be filled. I just do not see us breaking it with how extended these stocks are, unless there is a massive reversal in a lot of the bailout names and the Boeings of the world and the industrials. Unless there's a massive reversal in those sectors, which I doubt we're going to get one within this quarter. And I'm talking about reversal in terms of real economic activity. I don't think we're going to get one within this quarter or the next quarter. I find it very hard to believe that the S&P itself, the NASDAQ is a different story. I think that making all-time highs makes sense considering they're already pricing in this technological adoption. But the S&P, I think, will hit that gap, and we may end up going into a range for maybe maybe a quarter or two down the line. So that's just my 2 cents on that. I really don't think we're going to hit all-time highs. I keep seeing a lot of articles saying it's almost a done deal because the Nasdaq has hit an all-time high, and it's just like, what? Do you not realize these things are comprised of completely different things, and just the weight of everything? Unless you're expecting Apple to consistently go up 10 points a day, Microsoft 10 points a day, I find that very hard to believe that the S&P can reach that level.
Yeah, well, even in the Nasdaq, I mean, it seemed like a false breakout. It pierced up above, like maybe for a day, day and a half, right there, and then again, it came back under the high. So it wasn't like a clean breakout above the previous high of February.
Yeah, true.
Um,
Yeah.
but yeah, I'm kind of in agreement with you, Faisal. I think we can make it towards the gap right here. I would be really surprised if we make new all-time highs this year. Even getting towards this high, I don't think it's impossible, but getting above it and breaking above it, it would require a lot of strength, which I don't really know if the stock market has, because it's not like the stock market is running off the back of like great data or anything. It seems like the market has two good things that going for it. Number one, the Fed, and number two, maybe some sort of semblance of understanding that maybe in the next quarter or two we might start recovering and things are going to start getting better. But even that is largely speculative. The only thing that we have going for us right now is, hey, Fed's got your back, and that's it.
Well, I do think there's another very key aspect that people tend to forget, and it's the fact that interest rates, because of the disastrous health of the small business community right now, interest rates are going to remain low for them to be able to pick themselves back up and get back to business. And that itself is going to be just so beneficial to these large corporations that end up driving this market. I mean, that's one of the main themes, is the fact that interest rates, as even if you think this recovery cycle is going to take a long time, remember, low interest rates will probably be needed for that recovery cycle. And for the companies that are not struggling, like the Apples and the Microsofts, hell, that's like amazing to them. I mean, these stocks were going up insane a year ago or 2 years ago when the Fed was cutting rates even by a little bit. And now you're telling me they're going to stay low for 2 years when my business is not even struggling? I mean, that is probably going to be the biggest mover in these assets for the next 1 to 2 years, in my opinion. And I think, until we see the health in the small business community regain itself, low interest rates will continue to remain low.
Yeah. Speaking of interest rates, I was actually looking at the bond markets, and for those of you who don't understand the relationship between bonds and interest rates, they're effectively inverse in their nature. So when one goes up, the other effectively goes down, because it's the idea of money becoming cheaper to borrow, right? So bonds themselves, especially if you're looking at 10-year treasury notes, right? If the bonds are actually going up, okay, you would figure that the interest rates will probably go down. Now, here's something interesting that I saw that was happening in the bond markets earlier on in the week. The 10-year T-note actually broke its trend line and now is again heading back towards its range. And I think Austin had discussed that the 10-year note is probably going to range between 0.6 and 1.0. So I thought, okay, well, as long as it kind of stays above 0.6 and below 1.0, maybe rates are going to be pretty much, as is, right? I think the market is already starting to factor in negative interest rates. Am I right?
Oh, I don't know about that. But definitely they're pricing in at least a low level of rates for an extended period of time. It's not just a 1 quarter, 2 quarter things. No, I think this is a 1 to 2 year thing. And I think that means a lot for companies that are trying to aggressively expand within the next 1 to 2 years. And that cannot be, I don't even know how to price that type of value in. But if we do see negative interest rates, I'm not smart enough to know what type of implications that's going to have on not only, like, if we do get negative interest rates, I think that means the U.S. is in pretty bad shape. So I really don't know what to take from that if we do that. But as of right now, as long as we stay in that range, I think that's very healthy. That 0.6 to 1% range.
Yeah. Yeah, again, I don't know exactly what's going to happen, and I don't know if interest rates are going to go negative. But we'll cross that bridge when we get there. Last thing I want to discuss is the dollar, right? So we saw also dollar kind of put in this higher low right here and starting to spike back up again just today. Um, I think the one thing I'm concerned about is just like the coronavirus kind of caught everybody off guard in March, I'm trying to figure out, how to position myself in a way where I am not, too risk on in just getting, I guess, too deep into long positions in the stock market. If you were sort of talking to our viewers, first of all, how would you address the management of risk of understanding that coronavirus and this whole pandemic thing is still active? I want to protect myself and hedge myself properly, but I still want to be exposed to the stock market. Well, I guess, like, how are you first of all dealing with this? And if you had to give a piece of your opinion or advice to people, what would you say?
Just cash. Like I've tried to do shorts, and very recently I've done really well in the shorts, but it's really tough to short this market, and that's usually been my main hedge in the past. But this year I've not. It's not gone the best for me when I've shorted, to be honest. So that was usually my primary hedging tactic. Sometimes I would buy puts. I rarely buy gold because it hasn't been that type of inverse relation to the market. It's actually gone up with the market. So just mainly just cash is kind of the best way you can protect yourself. Only allocate, be very careful with your capital allocation and how much you put into one position or your overall net long position. That's just the most important tip I would take for the market that we're in right now.
Yeah, fair point. Johnny B has a question for us. He has a question asking, how have you guys done in this last quarter compared to previous quarters of your years of experience? Have you done well? Have you found it tougher or easier than usual? We'll be interested to know. I can answer that real quick first. So I'll be honest, in terms of equities, over here is basically when I close out a lot of my equity market positions. And I was fortunate enough, very fortunate enough to long dollar against EM markets. So this move down, I crushed it and I made a lot of money in the Forex markets. But in the equity markets, because I closed out a lot of positions, I didn't really know what the hell was going on with the coronavirus. So I didn't really have an understanding if I should just short the shit out of the market, you know? But because I didn't know, I just kind of stayed in cash. And then even on the move up, I had a lot of puts and a lot of shorts, which I got burnt in on the way up, but I closed them out right around middle of April or beginning of April. And then since then, I've been picking up stocks in the energy space, financials, option calls in the energy space, and then some of my favorite picks like AMD and Beyond Meat. So that's kind of how I've done in the market in terms of equities. And I would say if I was to look at quarter to quarter comparison, it's not the best quarter in terms of profitability, but in large part, I didn't really lose, that much money compared to other quarters because I was largely just conservative in my movements. Now, other people I'm sure made a shit ton of money on the way up if they were just, going all out longs or buying call options. I didn't really have the guts to do so. And so, like I said, largely in cash. And then in terms of crypto, I think for the most part, I did all right. I made a couple of mistakes where I could have definitely pulled some triggers on my longs. But again, this whole movement back up was something out of the ordinary, and I didn't quite understand it. So even on the way up, I will be honest, I kept shorting and shorting, thinking that I would see a top somewhere, but I got burnt. But then finally, I think I caught a breakout somewhere around here and somewhere around here to the upside. And so I covered some of my losses when I was shorting down here. And then over the last month or two, to be honest, I've done pretty darn well because I only had one short that got stopped out. A couple of scalps that got stopped out, but those are not really big sizes. Like my, swing short is at least 10 or 15 times the size of my scalp positions. So it's not even a comparison. So I've only taken 2 shorts in Bitcoin for the last month or two, and one was stopped out. The other one, I took half profit and then I reloaded on my position, and now I'm about $400 or $500 in profit in terms of the price itself. So that's my take on that. I'll let Faisal go.
Yeah, this quarter was pretty tough, especially considering there were just so many uncertainties. I remember when Apple pulled their earnings for the year, um, that was the biggest thing where we had seen the market continuously go up, even as cases were rising in China. And once Apple put out that report, I remember feeling like, okay, I think things are going to start to get a little rocky. And I started to cut a lot of my exposure, but the market ended up going up for another week or two. And so I'm pretty sure I added a little bit back and then got killed for the next week or 2 weeks, and then just continued to remain in cash. But I really bought heavy in stocks like JD and Uber and Comcast at the lows. I don't think Comcast has done anything for me so far, but Uber and JD have just done awesome. And just throughout this recovery cycle, I've really focused on trying to figure out the names that are going to do the best in this type of new environment. And, that worked out really well for me. Activision was one that I got in really early on, before even their last quarterly earnings report. It's been a really nice year for my upside trades. Like I said, my shorts. I mean, I was in my shorts. If I ever shorted the market on this type of on this recovery rally, I probably shorted for maybe a week and got killed a little bit and had to cover, and then immediately went long right after that. So it's been a really good quarter so far. Definitely better than the whole trade war quarter. I think was that one was a little bit tougher for me versus this one, where it just felt like if you stuck with the names that were making sense, like the online retail players or things like that, it was easy to make money, in my opinion.
Yeah, fair point. Let me see. Questions on gold. So I actually talked about gold the other day, and unfortunately, the darn thing, I had taken a long right here around 1761 in gold, and I had my stop right around, where the heck was it? I think 1749 or so, or 1750, and just wicked into my stop and then started to take off. So such is life. I still think gold is going to go higher. My target for this long position was 1800, 18 to 1825. So if you guys want to, take this trade, you still got an opportunity,
Yeah, I would just want to say on gold, I'm in Kirkland Lake, KL. It's a very good company. If you're looking at gold miners, I think this, and there's something Nevada. I'm forgetting the symbol. That's another good gold mining company. I forgot what it's called.
Nevada.
Yeah. Frank Nevada. They're very good too. Both of these stocks are fundamentally very good gold mining companies, really good cash reserves. And I actually I'm not a commodities expert, but I know a bit about stocks and fundamentals. And these companies are, compared to a lot of companies out right now, they're actually financially very, very strong.
Yeah, fair point. I actually have some GDX in my retirement account, and some GLD as well. They've done all right, nothing special, but they're not particularly large size. And then I have some silver as well. This, you typically hold on to metals in terms of commodities if you're kind of thinking that you need a recession hedge. And so I like keeping these just in the corner of my portfolio, because sometimes when the equity markets get burnt, these commodities do take off. But then again, when we had that liquidity crunch in coronavirus times, they also got crushed.
Mm-hmm.
So, again, just something to consider for y'all. If you do want to pay attention to, maybe keep an eye on gold miner ETFs, gold, and then silver. Okay. Let me see here. Some other questions. Okay, so I'll take a quick look at crypto, guys, because I already did this at the beginning, but I know you guys joined late. So I'll take a look at this one more time. LTC, the reason I think it took off is because it was remember that BitMEX still trades perpetuals. Okay, so if there were some heavy short positions that were lined up above this area, the market pretty much flushed those out. All right. I have heard that LTC could be a leading indicator at times, but I think that crown is more so given to Ethereum. I haven't heard anything about LTC being an asset that has been useful or should even be alive. But I think Ethereum has a place in the crypto ecosystem to actually do some good work. And so I believe, if anything, Ethereum is an indicator, leading indicator. And I think Ethereum so far has pretty much led on the ways up and down on this kind of price action. So if I were you, I'd be paying attention to Ethereum. And when it comes to LTC, I guess, if you want to go long, this is probably, the time you could consider going long, especially if this low right here holds, or if price comes back, let's just say towards this area right here, before we, had this point of breakdown. If price again comes back to this area and holds this low, this is potentially a long opportunity back towards these highs or back towards this area of point of breakdown. Okay, you can also look at something like this, where most of the volume was transacted in this area, and you can see right around there, you could take your profit for your long right around there. Okay, let me see if there's another quick question I can answer. Yeah, Bitcoin I already talked about, so just rewatch this video. It should be up on YouTube in a little bit. Let's see here. GLD is beating S&P 500 this year. Is it? I don't think it is. What? GLD. Let's see. I did not hear about that. Let's take a look at this. I don't think gold is actually beating the S&P 500 this year. Let's check it out percentage-wise and see what's going on. Oh, yeah, they're about the same. Let's see. No, I think the S&P 500 is up further a little bit, just by a little bit though. Let's check it from the lows. 1 second. Let's see, from this key low right here in March to where it is right now, 37%. Let's check out GLD. Oh wow, maybe it is up higher. Shit. Oh no, it's not. No, 22%. Yeah, so no, the S&P 500 is up from the March lows. Let's see here. What do you expect from Saturday to Sunday on crypto? Well, I mean, I'm still short. Like I said, don't trade weekends unless you like losing money, especially on Saturdays. I talked about why I believe that if you are thinking about getting into longs, the best place you could do that is a break above this key marker right here, 91.95. And you could take a trade from here to 92.88 or $9,400. Okay, but that's pretty much it. That's all I got. Faisal, anything else you want to talk about?
Yes, I got a couple stocks that I want y'all to keep an eye on. One, I've talked about this name, I think last video or 2 videos ago. SAM, S-A-M, Boston Beer, up 6% or 5% today, and it looks like it's going even higher. The estimates are looking awesome. They're growing 37% in 2021, and I believe 15% in this year for earnings, and they're continuing to maintain double-digit revenue growth, even though it's an expensive stock. As you saw today, it was up 33 points. This is a name that I'm in, and so far, I think you guys should definitely keep an eye on it, because I think it's one that could really have a nice run till the end of the year. And then another name that I just started researching today, MED, Medifast. I don't know if everyone knows what Nutrisystem is. They ran a lot of commercials back in the day. But basically, I think this is an undercover winner in the COVID environment. As people are not going to go out to gyms, they're going to opt to try other products that are going to help with weight loss or weight control. And Medifast is one of these companies that does make a lot of these foods and different weight management products for regular consumers for a flat fee, I believe. I'm not too sure on their pricing model, but fundamentally speaking, I looked at them. Man, this company is very, very good. And if you look at it from a long-term perspective, like go out for a couple years out. I mean, this stock it was like a 200 and something, like it was yeah, it is it's off for a long, long time. And just fundamentally speaking, I see tremendous value in this company and I'm looking to get in it probably at some point next week if I can find the right technical setup. But this is definitely one name that I would keep my eye on as gyms start to reclose maybe and people look for other alternatives for weight loss or weight management. It's definitely down a lot, so you may be getting it at a discount, in my opinion. Fundamentally speaking, yeah, it's definitely trading at a discount.
Perfect. Faisal, one last question we got from one of our members is any quick thoughts on the housing market?
I got into Pulte this week. It was not the best time to get into it. I think it's down like 3% from where I bought it, but I'm positive on it, but I'm willing to let the price action tell me that I'm wrong because I'm really unsure of how much good news is priced into the housing stocks right now. We keep seeing good report after good report after good report. But the price action is not really indicating that to me. And I think that could be because, at least from a stock perspective, a lot of the good news has been priced in, and we've seen a boost in demand in these housing or in houses this quarter. I don't know if what's being priced in is a decline over the next quarter or 2 quarters. It could be because unemployment is going to rise, and that in turn will at some point affect overall housing demand. But I'm still uncertain. I'm personally in the housing sector right now. I'm in PHM, but yeah, I'm very mixed on it. I don't know how I feel about it. I really want the price action in DHI, Lennar, ITB, ETF. I want them to show me that there's more juice in these assets, but so far, I mean, I don't know what to say. But the news that continues to come out is so positive. But I'm just not seeing that positivity translate in the stock prices, and that worries me a bit.
Fair point. Okay, last couple of questions. V is asking, any thoughts on AMD, and do you think that there's any good buying opportunities coming up?
Yes, I think right here. But this is not investment advice, but I think it's hit this 50 to 50 and a half. I don't know if it's going to break down below 49 and a half, actually. I think it's going to really try to maintain this $50 level, and hopefully it does. I'm really just hoping because I want to buy more. Like if I get the right sign Monday, I'm buying more then. So hopefully I can see it hold up. You can see there's a range right there, and it's literally right at the bottom. Can you take a look at NVIDIA real quick? Let me see NVIDIA real. I mean, NVIDIA is looking so much healthier. As long as NVIDIA continues to look healthy, I think that bodes pretty well for AMD's future. As long because for one, the growth estimates for the earnings and revenue, they're still on fire. They're still growing at an insane amount of rate, or at an insane rate. And as long as they continue to increase the earnings estimates, there is no reason for me to doubt how much this stock can go up, because as we've seen, if you are in an innovative sector, your premiums are massively going to be inflated because the market is just that's what's in demand right now. So I'm not going to fight it. It's not like a crazy PE, like a 300 PE like Coop. So I could definitely see this stock going to 60, $70 within this year. But before, it starts to pull back. But that's just my take on it. That's not really investment advice, but I hope it can hold 50.
Fair point. I'm also in a little bit of a AMD position, and I'll be honest, like I really like AMD. We did a deep dive on AMD and Intel 2 Sundays ago with our Advantage members, and so I personally still like the fact that it has good fundamental events coming up, like the Zen 3 chip that's coming out in this fall, and then Intel also losing Jim Keller. So make sure you guys do some research on your own. But those in the Advantage membership, We still have that video available in the live equities chat, so you can go watch that. My thoughts on Intel and AMD. And technicals wise, someone said that this is a triple top on AMD. I don't think it is. It's actually a larger cup and handle, in my opinion, that looks like it's playing out still. If anything, I think it's in a larger consolidation pattern, like maybe a larger triangle, like, this could be your A, B, C, maybe D, your E point, and you might need to start seeing a breakout from that. So if this is your A, B, C, D, E triangle pattern right here, you definitely want to see, breakout above this trend line right here. But until then, there's no confirmation. And like Faisal said, it needs to hold, that 49.5, hopefully. Okay.
Yeah, definitely 50 is where it should hold. I mean, if it starts to trade down to 49.5, even if it doesn't break below it, I'll get a little nervous, but it really should hold 50, this level right here. I can see how he sees it's a triple top, especially when it peaked a little bit a couple of weeks ago. It just immediately started selling off. But, I like to say, it's all about the fundamentals. And as long as they continue to point in the right direction, I feel like the strong support levels will hold off and the resistance levels will eventually be broken through. So that's just my 2 cents on it.
Yeah. There's another question. Trade Safari asked, hey, do you guys have a CFA qualification? Neither myself or Faisal do. We are just shooting the shit on YouTube. Please don't sue us.
Yeah, this is all for fun. We just really enjoy talking about this stuff. We are not that fancy, okay? In case you can't tell.
Yeah, but one thing, I will tell you that we are pretty open about things that we do in the market, our analysis and our trades. We're never going to tell you to buy or sell anything. We're showing you exactly what we're doing in the market to help us make money. And for the most part, I mean, you can go back on all our positions. We don't hide anything. We show you guys exactly when we're entering, exiting, when we're losing trades or winning trades. So it's all out there for you to look at. Look at our success rate, our strike rate. Any thoughts on Sono? Is that Sonos? Let's see. Yeah, I like Sonos, man. I'm actually a big fan. For someone who's actually like really dug into sound quality and music, I'm a really big fan of Sonos. But I think they have, in terms of like the home theater system, Sonos definitely premium quality. There's another company in the U.S. I've been out of the U.S. for a couple of months now, so I kind of forgot. What's that? Bang. What's it called? Bang and Oluf or something like that. What's it called, Faisal? Something in Oluf.
I don't know. I honestly haven't been keeping up with this industry. I'm not even familiar with Sono. I think I've heard of their products, but I've never taken a look at the stock.
Yeah, I mean they're definitely a perennial product in terms of sound quality, kind of on the level of Bose in my opinion and Sennheiser. So I personally like Sonos as a company. I don't really know exactly what they're doing in terms of their management, their earnings, but if you are part of the Advantage membership, we can definitely look at that for you. Bang & Olufsen. Yep, there we go. That's the name of the competitor. Let me see here. Any last questions before we take off for the weekend? I know Faisal has a drinking party he needs to get to. So, man, you guys are partying it up in Houston. That's one thing I want to talk about, Faisal. Like, do you guys just not believe in the virus there, or what's going on, man?
Bro, it's I don't know what it is about this place. It just feels like the virus, even though it's here, it's not here. I walk outside and there's still people eating out and about, and there's still people not wearing masks and stuff. The party that I'm going to, it's not that big. Okay, I'm not that popular, so it's not going to be this big coup de grace or whatever. So we're going to keep it small. I don't know. It's weird because around me, this city is seemingly at full capacity in almost every hospital bed. The fear should be so high, but when you talk to the average Houstonian, no one is afraid. Like no one is sounding the alarms at all.
Yeah, I think to me that is the one thing that's a little scary because I was reading this article from The Guardian, and they were talking about when it came to the Spanish flu, there was the same kind of dismissive attitude that people had, right? And now that we already saw the damage of, quote unquote, the first wave. Now the extension of this first wave, I think people are talking about it as if like, well, it's gotten better and we're not going to see as many deaths. And I think from a medical perspective, from everything that I'm reading, or I'm watching in terms of, videos and news, there's no possible way, first of all, that the virus has just spontaneously gotten weaker. So if the deaths are climbing, or I'm sorry, the infections are climbing, the deaths are just a lagging indicator. They're going to catch up sooner or later. And I think one other thing that people need to pay attention to is when hospitals start getting filled up and ICU beds start getting filled up, we start seeing more deaths because there's not enough, patient attention. There's not enough staff. There's not enough doctors to be able to pay attention to those individual patients, right? And then on top of that, you have nurses and doctors also getting exhausted and they themselves potentially getting infected. This was a large issue that we saw in March and April. So these are the things that I think are still of concern. And I don't think we're out of the woodwork yet. Yeah, maybe, maybe only the infections are rising. Maybe the deaths aren't rising yet. But it doesn't mean that we should sort of lift our foot off the gas pedal of being, cautious about this whole thing. This video that's circulating around the web about these people in West Palm Beach. And again, for those of you who don't know, I lived in West Palm Beach. Okay. There's these people who went up to the council, the city council, and they're talking about how, this is first of all a hoax, and you should be ashamed of yourselves for being doctors and telling people to wear masks. And some lady was going off on like 5G, and people are going to track her. I'm telling you guys, Florida is the place of crazies, and this is what happens in Florida. Like, my wife and I were sitting outside of Whole Foods, just enjoying our snack, our dessert, and these two people just start coming up to us, and they're like, "Hey, can you sign this petition?" We're like, "Well, what's the petition for?" They're like, "Well, this petition is about vaccines." I was like, "Okay, cool. Like what vaccine?" Like, "Well, no vaccine. We don't want our kids to get vaccinated." I'm like, "What the fuck?" And then we started getting into a conversation about the Earth being flat, which again, ridiculous conversation. And then they also started talking about Bill Gates wanting to eliminate 50% of the world population. So these are the people that you'll meet in Florida. And sadly, this is actually a lot of people who, first of all, don't want to wear masks because they have a rebellious attitude towards masks. They think that's an infringement upon their freedom in some, weird, obtuse way. So anyway, point is, this is what's happening in Florida. And it's actually happening in a lot of other states and a lot of other people. And it's kind of sad.
Yeah, the freedom thing is so big over here. I got a couple friends that are exactly like that. They just don't want to wear a mask. And I'm like, what is wrong with you? They go, it's not even going to help anyways. There's no study to say that it helps or anything like that. And just, yeah, it's that type of mentality, even if it could help a little bit, I'm worth putting it on. But to people like my friends, it's not worth it at all.
Yeah, exactly. All right, guys. Well, I think that's pretty much it. Again, if you've been watching our video, please do hit the thumbs up. It does help us to reach more of a larger audience, and it helps us attract more members. So that helps us do more free content. All right. That is it. Y'all take care. Have a good rest of your weekend, and we'll see you guys Sunday morning for the equities call. That's it. Cheers, everyone.
Peace.